SP500 daily time frame. First, this was your trend line and this was your rising wedge chart pattern. First, it retested, but on FOMC, it made double top right at this trend line, and all of this red daily candle confirm that everyone was selling because that was a perfect technical trade setup, and this trend we call buy the rumor sell the news. When these investors were buying SP500 in beginning of fourth quarter in October, they knew the rate hike size will decrease, and when that become confirmed in FOMC with official 50 basis point rate hike, they took profit on their buying entry and now it is coming down. And third biggest reason was the long term trend is still bearish for SP500 because Fed want to create recession in 2023 to control inflation. So when inflation is controlled and when recession they think become out of control, then they will change monetary policy, then it will go up. But before that it will only go down because central bank of their country want stocks to go down. So this is your last high and this chart pattern has been completed breakout, now it is coming down. And people who say they need clear signal clarity, then I have been telling about this trend line for more than 2 weeks before this trend line was retested, and that was perfect double top setup, and this came back to 38% retracement, and I have also explained in detail when you sell your minimum target is always first retracement level, whether it goes up or down, make new high or new low, but it don't stop before first few retracement level. So right now this level 4100 is your first nearest horizontal resistance, but if goes up again then it will break this trend line. But first nearest support are this few retracement level, the 50 and 61% retracement level. When this 61% retracement level will break at 37.24, then more selling pressure will come because this is technically last level, then people will sell aggressively and they will target new low. But after this double top sideways correction and chart pattern is possible because new money from hedge fund will come when new year will start, and next year 2023 especially first 6 months, that means first quarter and second quarter are bearish for these stocks. And our macro trend was first they were increasing rate hike size, but last FOMC meeting rate hike size has now decreased to 50 and it will decrease again to 25 because now market is expecting in Feb FOMC meeting they will hike 25. So in March 2023 there can be another 25 basis point or maybe no hike, but after March FOMC meeting rate hike will stop completely. So in March there will be last rate hike, then our new trend start because they were buying that trend is over, and they all the time have insider information because they are billionaire hedge fund manager. And next thing is last hike then first rate cut. Since all the signal about Fed FOMC decision comes from FOMC member and blackout period is now over, so their speech has been started And now they are saying that timing between last hike and first cut can be 11 month. So right now they are saying 11 month, but by the time we reach March 2023, that number will decrease again, can go up to 6 month. So now market is expecting in December 2023, 1 year in future, rate cut will start. And when rate cut will start, these stock will drop more. So until this bear market is over, trade with bearish bias. So this is your first key resistance level, and this trend line your dynamic resistance. And next bearish target when it will make new lower low in first quarter of next year. The target will be 61% retracement level of this previous bullish trend. And you as a beginner trader, you have to be careful that this was trend when center bank want stocks to go up, and this is bearish trend when center bank want stocks to go down. Until their intention, their monetary policy don't change, this bear market will not over. And a simple trick for trader, when new low comes, their tone our monetary policy change. So by the time we get new lower low, their dovish tone will increase. So this level 4100 is your resistance and support 3195. And before this level breaks last low, you can expect a sideways correction chart pattern or zigzag, then new lower low. And if we see Dow Jones Industrial Average daily time frame, then same thing is here. It goes up 61% retracement level, and after this fake breakout, before even hit 78% retracement level, it is coming down. But again, this entire area from 61% retracement level to 78 is your key resistance zone. And risk again is new lower low, and target will be 50 and 61% retracement level. And if we see NASDAQ daily time frame, then this was your first bullish trend, now it is coming down. And since this is a stagflation cycle, not a recession that we saw in last 30 years, that trend has been changed. So things will be different, and that new trend has been started, and that is long term bearish for stock market. So by the time this support level breaks, new low comes, the target will be 78% retracement of this bullish trend and 100% projection for this wave Y compared to W and X. And these level are near 8000 level. So in case of new lower low, there is no big support before 8910. This is your first support, and it is 78% retracement level. And if we only focus on this last wave, then first it made 50% retracement level, and now it is coming down. It not only hit 50% retracement level, but this was like a dynamic triple top, and it tested this trend line 3 times. And now market is ready for next trend, rate pause. But before Feb FOMC meeting, all of these FOMC member will tell everything in advance. But one thing is clear, March 2023 will be last rate hike. Then this bearish market can stop and go into correction. And when rate cut will start, then they will drop again. So that was clear signal, 50% retracement and dynamic triple top with trend line. And if you can't trade that setup, then you are complete beginner and you need to learn more and more. So this daily time frame, first resistance 12,080 and support 8,910, because new low will come and support will break, and in that condition wait for clear breakout, then we will sell retest and will target new low. And only important news this week is Fed PCE number, and core PCE number is Fed interest rate. So right now they are saying 5.1% terminal rate, but PCE drops, then terminal rate can drops too.